Hello and welcome back. If you are new here, my name is Jessica Abella. I am a tax advisor in the greater Seattle area, and today I'd like to run through the top 3 things that we as tax professionals have to ask our clients to go back and log in somewhere and go find to hopefully help you get your documents together in time for a smooth and easy tax season. As a bonus, I'm going to add 3 business-related items as well, so hang in there for that if you own a business. So number 1, the 1099s for your interest income from your bank, especially if you use a credit union like Boeing Employees Credit Union. They often seem to put these 1099s out on their website without any fanfare. If a bank pays you more than $10 in interest during the year, they do create that 1099, they do send it to the IRS. So make sure that you retrieve that and have that with your tax documents. Number 2 is the 1099 SA for any health savings accounts. So if you have a health savings account and you used any of those funds throughout the year, then there will be a 1099 SA. You may need to log in through your employer's portal. You may need to log in directly to the HSA provider. That one is more common. In order to retrieve that 1099, this is another one that for whatever reason they tend to post online and not actually send you a hard copy. So definitely go look for that. Those distributions that you're using for medical expenses are tax-free. Don't worry, this 1099 doesn't mean you're going to pay tax on those dollars, but the IRS got a copy of it too. So there's a form in your tax return that shows this is how much you took out of the HSA and this is how much you used for medical expenses. Usually that's all of it, and none of it will be taxable. Number 3 is the 1095A if you had health insurance through the state health insurance exchange. So if you have health insurance through your employer, this isn't something you need to worry about. You'll get a 1095 in the mail sometime in April. It's fine, we don't need that. But if you have health insurance through Washington Health Plan Finder or whatever your state's exchange is, if you're not here in Washington State, make sure to get that 1095A to your tax professional. If you used some subsidy funds for your health insurance, that's reported on that 1095A. If you didn't, but you were eligible to, your tax return reconciles that between what you received in subsidies and what you were eligible for based on your income for the year. So it's really important. The IRS does have an electronic filing error that will kick back if you try to e-file the return and you don't include that reconciliation, but you did have coverage through Health Plan Finder or through your state's exchange. So really important to get that. So now for the 3 items, if you are a business owner, the 3 items that we also have to ask business owners for, these are 3 things that are not usually tracked within your QuickBooks file. So they're things that you need to provide in addition. Number 1 is your mileage information. Remember that if you are deducting travel-related, driving-related expenses, we need your total miles driven on that vehicle for the year, the number of business miles driven on that vehicle for the year. Both of those numbers are key, whether you're taking the standard mileage rate or taking actual expenses on that vehicle. We've done another video on calculating vehicle expenses, and I'll link that. Number 2 is your home office information. So if you are operating your business from home, using space in your home regularly and exclusively to run your business, then we need your total square footage for the whole house, the number of square feet that you are using exclusively for business, and then your household expenses. So your utilities, your insurance, your rent. If you are paying on a mortgage, we probably already received that tax document from you, so we probably don't need that. But if you're renting, certainly the amount of rent that you paid. Number 3 for businesses would be the business portion of your cell phone expense. So if you're paying for your cell phone personally and you use it 50% for business, that prorated amount is the amount that we want to be sure to deduct. Generally, you can't deduct 100% of your cell phone expense unless you have a business phone and a personal phone, but otherwise you need to make a best effort to prorate based on your actual usage. So, theoretically, as a business owner, everything else that is deductible for your business, everything else that you need to complete your tax return should be included in your QuickBooks file or whatever accounting system that you use. Hopefully, this was helpful. Please let me know if you have any questions either on this topic or any other topic in the comments down below. Hit like if this was helpful. Subscribe if you'd like weekly videos in this vein. And I hope that you have a smooth and peaceful tax season.